to talk about Arbitrum, the popular layer 2 scaling solution on Ethereum. How many ARB tokens do you need to be holding today to become the next cryptocurrency millionaire? This is a token that since launch has run up to $1.80, now sitting at $1.20 roughly. How many of these tokens do you need to be stacking up? What kind of return will you need to see on Arbitrum to become a millionaire? We're going to be breaking that down and a lot more. Smash up the likes. If you want to buy this cryptocurrency, you can do so. Ijaz.uk/Bybit. That also supports this channel. If you want to see me do this breakdown for any of your other favorite altcoins, comment them below in capitals and the most popularly thumbs up. I will get that video spun up for you guys. Let's jump straight into this one, guys. And as we know, Arbitrum is a project that is sitting at $1.5 billion in market cap. Whenever we talk about the returns on a project, and remember, I've got to go over this because there's a new cryptocurrency trader born every single day. It's not about the token price, it's the market cap. If you want a 10x on your project, the market cap needs to 10x. So Arbitrum would have to go from 1.5 billion to $15 billion in market cap. Now, the other added dilemma you have to take into account in your calculations is the tokenomics. Now, this is not meant as a deep dive for tokenomics on Arbitrum. Again, if you want that, let me know in the comments. We can spin that up for you guys. But as a warning, only 12.75% of the Arbitrum supply of 12 billion tokens is in circulating supply. Therefore, we have to understand that the fully diluted market cap of Arbitrum already sits at about $12 billion. This is not a cheap project, and therefore you've got to factor that in like we're going to do now when we model out our returns. Very important that you understand this, because this excess, the remaining supply all the way up to $12 billion, will continually being dumped in the market, and that's going to have an effect on the pumpability of your project or coin. Very, very important. We are sitting right now at the current price of $1.20 here on Arbitrum. Okay, that's the price point we're at right now. And I've gone and set a base, a target, achievable, stretch, moon. This is the heuristic I like to use for any cryptocurrency that I'm investing in my portfolio. I set a base target, I then have a target, which is basically what I expected to achieve. Then I have an achievable one, which a team should be going out and achieving. Then you have your stretch and moon. And again, I never ever account for stretch or moon to happen. I don't need stretch or the moon case scenario to happen for me to do well. If the target and achievable case does well, if we hit those levels, my portfolio is going to be just fine. If we hit the base, then I'm more than comfortable, okay? And the way this works is when you invest in a basket of altcoins, and all of your portfolio should be diverse and you should have a different number of altcoins, a certain percentage will fail, but a certain percentage will outperform and hit the stretch and moon case. And over time, you'll be building returns in your portfolio. Therefore, if we want to see a return of 10x, 20x, 50x, 100x, because everybody shouts out these numbers, what does it mean? We can see very simply here, if we want to do a 10x here, the market cap would have to get to $15 billion. This number here is in billions, okay? 15 billion. And that would bring the price to $12, right? Which is what most of us focus on. So at 1.2 now, we want to sell at $12. That's going to give you your 10x. And so now we need to think about it and say, okay, how do we put this $15 billion valuation into perspective? Because if you're an investor, whether you're real estate, stocks, bonds, or anything else, what does investing mean? You need to be able to understand how much other similar things go for. That's how you place a value on something, right? If you're selling your house, how much are other 3-bedroom houses going for? Right, so we need to look at the same thing. And that's why on the right-hand side here, you will see that I put up the popular market caps of other projects here during a bear market. Now, these aren't the absolute latest prices here, but just rough indications so you can get an idea. And I put their all-time high market cap too. Now, the ones I want you to focus on predominantly here are Optimism, which is another layer 2 scaling solution on Ethereum, and also Polygon Matic. Okay, so with Polygon Matic, you can see you're sat here at $6.8 billion, the biggest layer 2 scaling solution out there. At the previous bull market, they managed to hit 20 billion in market cap at their peak. So for us to say that Arbitrum, which by the way is growing very, very rapidly, I want you guys to see this here. Look at the daily transactions, holding up nice and strong here with around 666,000 daily transactions per day. You can see that a unique address is continuing to rise here, crossing 10 million total distinct addresses. And you can also see here this breakdown, which is very, very interesting. They're currently running at $115 million in annualized revenue, with net profit of 30 to 40%. So they're generating cash, guys. And they think that this could go up to 90 to 95% profit margin. In other words, if you want to put it in perspective, they're still a bit off Ethereum, right? Ethereum's generating $3 to $5 billion in annualized fees, but Arbitrum is already doing half of Ethereum's mainnet spot DEX volumes. So this is a fast-growing space, and Arbitrum is printing cash, and they are growing rapidly in this space. So to argue that it can't get to $15 in the next bull market, right? Remember, this is for the next bull run. Of course it can, right? Because you will expect Matic to do much better than its 20 billion from its bull market. So if Matic is going to be going after 40, 50, 60 billion, then you're going to leave some space behind. So this is why this is the base case. And this base case would then mean that the coins needed will be 83,000 coins today, which is going to set you back quite a hefty sum here of $100,000 if you want to become a millionaire with just a 10x. Of course, right? You have to spend 100k today for that 10x. Okay, let's say they can do a little bit better than that. What if they could go ahead and deliver a 20x, yes, a 20x in the next bull cycle, getting the price to $24. That would now imply a $31 billion market cap. And I'm going to keep caveating this, guys. Don't forget this yellow box down here. The circulating supply is very low. So that's why on the right-hand side in this column, I've put the fully diluted market cap, because if these coins are thrown into circulation, your calculation needs to be completely adjusted, okay? Because you're going to have more coins in circulation. So it depends how they release those tokens over time. Very, very important that you go and overlay that. If you guys do want that breakdown of the tokenomics, I will do that in a separate video for you guys. I'm just showing you how you build it out in the current market cap. So now we're sitting at $31 billion. Again, can you get to $31 billion? I don't think that's crazy. Again, you're going to want to expect Matic to go and deliver. Matic will have to go to 50 billion, 40 billion, those kind of levels. Even then, many people will argue that Arbitrum is the superior layer 2 solution, right? So you'd expect it to eclipse it in the next bull run. So getting to $31 billion is not out of the realm of crazy here on the market cap for a fast-growing layer 2 solution. You will then need 41,000 coins here today, and you'll need to spend $50,000 to become a millionaire in the next cycle. Okay, I know these sounds like crazy numbers, but where do you get these kinds of returns in any other asset class? You don't, right? Not financial advice, edutainment purposes. Okay, let's up the ante a little bit. And now we're going to go for a 50x. A 50x, again, people throw around numbers, but what does a 50x look like? 50x will take us from $1.20 up to $60 per Arbitrum token. And now the market cap is sitting at $76 billion here. Again, not fully diluted. Just the market cap will be sitting at $76 billion with the current number of tokens in supply. And that now is when we start to get a little bit frothy, because now you're going into the territory of layer 1 solutions. Layer 1 solutions have indeed proven themselves to be big market caps, right? We know that Ethereum's gone up to $500 billion. We know that Binance Coin sat at $108 billion. We know that Cardano, even without launching their smart contracts, was sitting at $95 billion. So whilst I don't think this is not possible, it's definitely achievable. You need more things to go your way, right? You will need to see, like it says here in this interesting bit, that you will get this at some point, this flippening. If you see here, it says here, Ho believes it's only a matter of time before a layer 2 fully flips Ethereum in economic activity. So these are the kind of things you'll need to start getting right to hit some of these higher targets. So if you think you can get to $76 billion in market cap, if you can get to $60 per token, then you need about 16,600 coins, which is going to set you back about $20,000 at today's market cap. And $20,000 at an achievable price point here, of course, you've got to factor in the extra dilution, could make you the next cryptocurrency millionaire. So it's finally good to put some numbers around this instead of just hypothesizing and guessing and saying, I want to buy a bunch of Arbitrum and hopefully I'll become rich someday. What's your game plan, right? What's your actual structured game plan, like I'm giving you the methodology here? Let's say now we're going to go for this target, which is we're going to go for 100x. We're really going to go for it, and we think we can get 100x here on Arbitrum. The $1.20 is going to go to $120 per token. Wow, right? Which that means we'll only need to invest 10k today to become a million. Then you would need a market cap, again, not fully diluted, a market cap of 153 billion. And this is where things start to get a little bit crazy. This is where things start to fall down, because in the previous scenario, in the achievable case, what you were saying is you're getting to a $76 billion market cap. And your fully diluted market cap, assuming they put all the tokens into circulation, would be sitting at $600 billion. Already, that is the size of Ethereum at the previous all-time high market cap. Okay, Ethereum sat at 569 billion in the last bull run market cap. If Arbitrum flipped Ethereum. If it did really well, of course, Ethereum will be looking to get to a much bigger market cap. It'll be looking to surpass 1 trillion in the next bull market. It's leaving that space behind for Arbitrum to be the next biggest cryptocurrency around there at that 600 level. You can make that argument, but making this argument at the stretch level becomes very, very difficult. To say that you can get to 153 billion here and then 1.2 billion in fully diluted market cap, now you're talking the size of Bitcoin. What Bitcoin was in the last bull cycle, you're saying that Arbitrum could be that size. This is where it starts to get difficult, right? And this is where I would never account for any of these to happen. It could happen if everything goes right and Bitcoin goes absolutely berserk and goes to 10 trillion in market cap and onwards, then of course it leaves space behind for Ethereum, Arbitrum, maybe Matic and Optimism to take up some of the other market cap behind it. Of course, the whole market can grow and adoption can grow. But as we stand now, to make an argument for 1.2 trillion in fully diluted market cap for Arbitrum would be silly, okay? So you wouldn't account for that. Now, if you were expecting that, you would need just 8,000 Arbitrum tokens today. Could be enough. That's 10 grand spent today. Could be enough to make you a millionaire on just Arbitrum alone. None of the other tokens in your portfolio is your crazy, crazy moon case, right? Like, how do you even make an argument for this where you're sitting at $1.5 trillion in just the market cap with all the dilution on top? Like, this is just absurd, right? But this is the argument where things just, the world goes crazy, complete momentum, everything goes absurd, and you've just put $1,000 in to become the next millionaire. And that's why I put this in here. Because loads of people have this understanding or this belief that if I just chuck $1,000 into Arbitrum, because it's crypto, it can go crazy and I can become a millionaire overnight. Well, this is what you're asking for. If you're putting $1,000 into Arbitrum today and you just think you're going to wake up one day as a millionaire off your Arbitrum, you'd have to wake up in a world where Arbitrum is sat at a market cap of $1.5 trillion without the dilution. With the dilution, $12 trillion. Yeah, it's not happening, right? We'd have to be living in a parallel universe. So this is the thing where I want you guys to start understanding that when you are modeling, we've got to model realistically based on what our base, target, and achievable range is. The stretch one can sometimes happen if things go your way, if the bull market is explosive, if the market's growing and there's huge adoption. Of course, you can make an argument for it, but it relies on external factors going your way. It's really these ones that you want to make sure these stack up before you invest to make sure you're getting your return. If you like this type of video and you like this breakdown, you want to see me do it for another one of your favorite altcoins, comment it below. If you want to buy Arbitrum, ijaz.uk/buybit. Thanks for watching, and I'll see you in the next one.